to go see what the where SEP. Well, I mean, where the D indices went off, and
okay. Well, you know what? You should put together a list of what you think that and then we can. Then you should talk to the exchange because they will listen. I'm telling you, I've been pretty impressed that they will listen. So tell them what you think and have somebody walk you through it. And if there's a problem, they should be very aware of it. So that's all I'm going to speak to. So
well,
let's get on with the other business.
Okay. Well, first of all, that was a great interview with Whalen and Bookvar, and I found the end of it. Well, I'm going to let you speak to all of it, but the end of it was what really kind of interested me because I only go off of technical triggers because I'm not smart enough to think about how the fundamentals really play into a lot of things. But the Citibank and the 20% rally that just had kind of struck me from what he thought might go on there. Yeah.
I mean, listen, I'm hoping that there's another one coming in a couple of weeks because after we got off, I talked about it with Benugli, who does the moderation. I said there's a lot more to pick up on here, especially with the bond markets. And when you put it in context again with what Druck had to talk about, and you see, look at it. These yield curves have moved, and I go back to the Faber piece I did, and I said, well, my point was, why would you take on duration risk? And I think that's from Druckenmiller to Whalen. And let me tell you this, point blank. I think that Chris Whalen is the best bank analyst from top to bottom, meaning as far as understanding the regs, the plumbing, not the in-depth plumbing of somebody like Poszar in the repo markets, but just of understanding how it all works and puts together. So, I mean, that's why I've been a big fan of his for a long time. So to be able to sit there and you can see how we push a little bit. And we need to do more discussions about the global aspect of the dollar and the funding system and what does it mean. And, it's just, there's a lot out there to do. That's all I'm going to say. And, to sit and Bookvar has been just all over this stuff and so good with it. So I have to say I've done some really good ones with the FRA and just like sitting in this room, we're able to push out, ideas that have investable, Navarro, I guess, is speaking, so I'm getting some stuff. And that's what it's really all about. So hopefully that people will be able to find some things there. Or, more importantly, I can't stress this enough, to avoid some bad trades. Because we know that, sometimes especially when you think these through with a group of people and able to avoid some of the crap, that's worth it all because bad trades just, put you in a bad mental state. We need Credelli in here to really walk us through some of it. But I think that's some of the most important work that I do for myself is to work through things and avoid some of the really bad trades that can really, just throw you off. That's why November was so bad. It's not the thoughts were good, but I made some terrible trades that really left me chasing myself, and that's a bad spot to be in. But let's go on from there. So
one of the things I was looking at this morning, and Peter and I were talking about, was that the silver and the gold have broken out against the yuan and the euro, and but I was surprised because all the European debt markets were sold off and they were still up.
Yeah, I sent out a piece, some of these guys who I sit with on Mondays, because they've become pretty good traders. And this one guy has become really traded the silver great, not the futures. He trades SLV, but he traded it great. And I sent him a note yesterday because we were talking about it. that gold silver was actually got below the 200-day, which it hadn't visited in a while. And it's been believe me, it's given one more head fake after another. But I want to, as I've talked about, I want to see, platinum is weak today with palladium. Hold on, let me see where I'm at there.
Oh yeah, palladium got smoked today, ORL day.
Yeah. And it's, so now they have those metals, but now silver, which should be outlier, but I actually put on some silver gold on the 200-day. But now I lifted the gold short. I'm looking at the silver because it's actually performing quite well. And that really fits with the rally in the stock market, which I know that's one of the questions. What was that? That came from who? From PWQ? Who's that? Peter?
Peter.
Okay, Peter. Yeah, that's what I figured. How long do you see this liquidity? Let's start with that question. And the real answer is, I don't know. But as we have discussed in this room, this and many other people besides myself have brought to the table, this cheap liquidity fuels a lot of different asset classes, most importantly the equities, or most significantly the equities, but certainly look what's going on in the high yield market with the compression between secure debt and more what I would call high risk debt because of money, and they openly admit it. All these advisors and portfolio managers, they're just chasing. It's not a good situation to be in, where you're chasing. And you know what? They're able to push these valuations up going into year end. And gee, what do you think they get paid on? They don't get paid on when they close out the trade. They'll get paid at quarter end and year end. So, you know what? And there's a lot of money on the sidelines. So it keeps pushing. Who would be buying this crap? I have no idea. Again, it's not for me. I look at risk reward ratio, and the risk reward ratio is actually better in the equity market than I would say it's in the bond market. I think the bond market is loaded with all kinds of risk.
Yet you see nothing but story after story after story about how much money is being poured into junk bonds.
Yeah, I know, one story after another. And you know, and that's what they do. They get out there and they sell it. So now everybody's chasing it. But more importantly is, and this is, you know, we didn't flush this out enough with Bookvar and Whalen, but we got somewhat into it. You know, when you build, that's the problem with passive investing. I know ETFs work. I know what it's about. But tell me if you've bought, you know, HYG or LQD. Do you know what's really in there outside of, well, it's going up, so I'm buying it. But to me, and we've talked about it in this room, it does resemble the subprime debt issues. When there were packages put together where 85% was supposedly AAA, and the other 15% was, well, I don't know how I would define it. And at the end, the 15% revealed that the 85 wasn't really that AAA and crushed it all. So is this what's going on here? I don't know that, but I certainly ask myself that question on a regular basis. Now here, I have HYG up. So we see it closed December 31st of 18 at $81, and we're up at 87. I mean, that's a pretty substantial move, especially when there's so much more supply that has entered the market. You know, there's a lot of companies, and I'm glad we got into the WeWork, but we didn't even discuss the debt load of WeWork. We just discussed look at LQD. So you'd have to break it down and tell me what's in these things. And again, we don't know. Well, you do know. You're going to find them, but most people who are buying them,
they have no clue.
No, they have no. But the return. Listen, if you've owned LQD this year from the first of the year, you've had a very nice year. You're up 10%, and whatever dividends you've gotten, or basic equipment coupon. So you've had a very nice year. So, hey, you know what? Thumb your nose at me and say, hey, well, what are you talking about? This is great. Okay, enjoy the ride. That's what I say. You know what? It's the same people who were busy flipping houses in 2006 and 2007 and who were in the mortgage business who, when I would say, are you out of your minds? And they would say, what are you talking about? I'm making a fortune.
Yeah.
Until you're not. Really, people gave me so much crap when I would sit and talk to them. I go, okay, enjoy it. I wish you nothing but great success, which is true. But I do know the dangers that are involved.
I mean, those kids were making $800,000 to $1.2 million plus a year, and then nothing. Then it was
and if they held, and quickly, and if they held on to stuff.
Tying back to that, Ira, is, we were talking about Gartman the other day, and him hanging up his boots, but and everybody's lambasted him from Zero Hedge to, FinTwit, or whatever you call financial Twitter. Everybody's been lambasting Gartman for his bad calls the last couple of years, but, and I saw it pointed out in your blog that he has made some, and you pointed it out too, he's made some astronomical calls, especially with real estate and commodities going back to 2003. And I remember this line, and I had to laugh when I read it on your blog, as a comment was, you want to own things that you can drop on your foot. Okay.
Right.
Well, from 03 to 07 or 08, that was hugely profitable. But as we've been talking about, with the market, now I'm long NASDAQ, I'm long S&P intraday, but I'm long NASDAQ, and it's a trade, not an investment. We all know that the pitfalls that we're looking at, but to tie it all back together, I guess, is one of the first things that Judd taught me was to, as a trader in '98, is get out when you can, not when you have to. And pretty soon, everybody's going to have to, in one form or another, whether it's real estate or equities or bonds or who knows.
I know that's right. Trees do not grow to the sky. It's just not. Enjoy it, but that's why people say, "Oh, you can't time it." You know what? Unless you're somebody like Buffett, who's aggregating companies and utilizing the cash flow from those companies to finance everything that you're looking at, and there are so few people who are capable of doing that, because again, you have to be buying at the right time. And that means that you have to have capital available to you when the situation arises. Hence Buffett's rule about be fearful when they're greedy and be greedy when they're fearful. Because that's all that's saying. It's the same thing with guys like Sam Zell. Step away and watch what Sam Zell does. He does what we used to say on the floor is when the ducks are quacking, feed the ducks. You know what? He has an uncanny, and I say that tongue in cheek, an uncanny ability to know where the tops are. And because he can see irrational purchasing. One of the better things we talked about on that podcast is private equity groups. Private equity groups are flush with cash because, again, pension funds, insurance companies, endowments, let's keep going, who are looking for returns, are placing money with private equity in the hope that they'll generate a higher return. And I've maintained this for so many years because I've watched it as everybody was getting out of working for investment banks and they were opening up their own private equity groups or hedge funds. Just because there's more money out there looking doesn't mean that there's better ideas, because the fact of the matter is there's only so many investable ideas at any time. That's just, and I don't care what Silicon Valley tells me about venture capital, because they're still chasing and wasting money too. Back in 1998, 99, I can't tell you how many conversations I had with people who were trying to explain to me the burn rate. I said, burn rate? I'm a middle class kid. I don't burn money. I conserve capital to use it for other things. not burn rates, you know, but I was stupid and they were all geniuses. And that's what they were preaching. So, okay. But sometimes, you know, and Jeremy Grantham was really good at this, sometimes you run career risk by being in opposition to what the most recent trend in the in capitalist investment is. That's just true. And sometimes you have to step back. But it is uncanny how people like Zell and Buffett and a few others preserve their capital to be able to take advantage when people become fearful. And fearful they will become. Look at, we're a year away. Today's December 20th. Do you remember how fearful people were last year? Go look at the charts.
I do well.
You know, just get me out of here. Just get me out of here. I can't, you know, bonds, everything. It's just get me out of here. Now you can't get enough of it. You can't get enough of it. So that too. Hold on one second. Yeah, I see Blackstone. Thank you. I'm reading it now. Yes, you know what? And I got out of Blackstone early because when they changed the structure, that was a bad investment mistake. I stayed for a long time, and it was one of my parking spots coming out of parking places, I should say, coming out of 2011, 2012, because I thought their ability to preserve cash and buy assets cheap, which was right. But the structure, until they went to a pure common equity holding, which really lifted the value. I wait the same thing, by the way, for AllianceBernstein, because I think they're in a very good spot. They've aggregated a huge amount of capital, but their structure is terrible. The fact that you have to file K1s deters a lot of people from investing with them. That's a different story. But they have an uncanny ability to say, well, you know what, these valuations are getting a little frothy, and you know, and I don't care whether you're using Schiller's Cape or Andrew Smithers valuing Wall Street with Tobin's Q theory. Things get frothy, and listen, we're in December. Last year we had a holiday market, thin market that cratered asset values. Remember, we know what was going on in the equity markets and the bond markets. They were both getting crushed. So I'm looking for opportunities here. And I know that they're going to keep pushing because it's in their best interest to keep pushing. So I'm not standing there, and I will just look for some opportunities to avail myself of, because that's what nice thin markets do for you at times if you're patient. I can't stress it enough. If you're patient.
I was making that point earlier, Ira, just from a trading standpoint, how I always loved these holiday. I always loved these holiday markets. Well, this most specifically last year's holiday markets were great, but I mean, I do. The day after Thanksgiving, since 1998, has been one of my favorite trading days of the year. The days leading up to Christmas are always some of my favorite trading days of the year because they're thin and because they do present tradable opportunities, as long as you are patient.
Yeah. Oh yeah. 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 I mean, listen, I've seen some things one year with the Australian dollar, and I was long Australian dollars. It was a couple of years ago, and it had a big rally right into Christmas, the day after, I think. And I'm calling the exchange. I was calling the GCC to tell them that, you know, they got overextended from where they ought to be and that they should look at taking some of the trades out. And they go, "Are you short?" I said, "No, I'm long, and I've been selling up here." But I said, "You might want to look at some things." And they said, "No, it stays within the bounds." But I said, you know, and I'm just, you know, you look for all markets to sustain their integrity. And believe me, and I've benefited immensely in my career. It was one of the great things about being on the floor. was the ability to do that. That you would find yourself with great opportunities. Sometimes they avail themselves in the electronic world, sometimes not, but things do get. Look at, let's talk about this. Do you remember what happened last January 3rd, January 3rd, 2019? January 3rd to 4th? Anybody recall what happened?
Well, in the equity markets or in the bond markets, we rallied. We set the low for the year and we rallied off that.
Yeah. How about what happened in the yen with the flash crash?
Yeah.
Don't look at all the yen crosses.
Damn, I forgot about that.
It was an enormous day. I'll tell you what, the yen screamed on that. Came out of Wellington, and I was actually short yen. But that was one of those times I go, I don't know. I'm looking at everything. I go, no, I had gotten out, stopped out, but I sold them back. I go, you know what? This is just one of those moments where people have lost whatever. Somebody was pushing for some reason. But those are the types of days. Let's see. The euro yen had a huge range that day. Probably, yeah, there it is, January.
Yeah, and we're right to the 200 months in dollar yen.
200.
Yeah. Look at that move. I mean, it was enormous. What was the yen outright was? So big. Yep. How about that? Nothing to. Yeah. It was a 4.5 handle range. That's what you want to be on. Now you can't always be there because sometimes you have taken a position and rightfully so. But in these thin markets, be patient. You will see things that you will not believe.
Oh, it's great.
And that's what you're talking about.
That's absolutely right. The day after Christmas was the day in the equities, the 26th, when we went down to the 200 weekly in the S&P.
Yeah, hold on. Yeah, let me take a quick snapshot of that. Yep. Yeah, there it is. And then what happened then? Do we recall what happened then?
Straight up.
Yeah, straight up.
Mnuchin.
Yes, Fredo came out. I mean,
Fredo came out.
Mnuchin.
Yes,
Mnuchin was calling all the banks
from the beach.
Yeah, from Cabo.
Yeah, with his wife front running the trades.
Yes. That's not for my. What?
That's just
I
me.
could say that. I know. I could say that on Saturday Night Live, but I can't say it anywhere else. But
and it worked.
Yeah, it worked. Oh Lordy. You know what? And that's what he did, and nobody understood it. And first, that led to a panic, and then it corrected itself. Because why was he making these calls? That was the real fallout from it. Why is he making these calls? What is he doing?
He's buying calls.
So I mean, you do see things like this, and this world is you know what? I know it keeps going up, and let's go back to Peter's question. That's the cheap money. It just drives it. And that's the Swedes raised rates this way to 0. Okay, we saw that. I knew that was coming because they told it, and they couldn't back off from that. Of course, they're getting bashed in some circles. So, well, what are they doing? What do they call it? What did Krugman call it? Monomasochism, or I don't know. He's got a term for it when the last time they did that. But the world is fraught with danger. And it's being covered up by loose money, which is why that was another part of the good conversation to be found on that podcast. And you get it from Whalen, who certainly understands the banks and the interior of the bank balance sheets and everything. It's all just being covered up, and the Fed, they walk into this game and they don't know how to extricate themselves, and that's the key. Tell me, anybody who wants to argue this, explain to me what their exit strategy is. Explain to me. I await. Tell me what the exit strategy is, because all they do is come up with counterfactuals. Well, if we hadn't done that, we would have gotten this. If we hadn't gotten this, we would have gotten. You know what? Tell me what I have to deal in world of practice, not theory. Tell me what you're going to do to get yourself out of this. So I want to know. Just you got to tell me.
Well, the one thing that interested me was his comments about the Fed getting into the banking business.
Oh yeah. The electronic money and everything that comes with it, because then they're going to be the processor of all of this, you know. And yeah, I know Chris is adamant about that here, and he sees, you know, because they just can't get out of their own way now. They've taken on.
So I had a question about this. I had a question about this liquidity impulse right into equities right now, this year-end one. Every day it's up 20 basis points in the morning, you know, blah, blah, blah. And it's just, how far do you see that going? Do you have any opinions about that?
Wait, you mean on the repo?
No, just on the whole stock market, and right now in the in the near term, not the big macro term.
Yeah. This, I know it's not Angelo. This is Peter, right?
Yeah. Yeah, Peter.
Peter, you know
the
what?
Irish Angelo.
Yeah, right. Angelo's in his class dreaming.
Okay, as Herb Stein, who is Nixon's economic, the head of Nixon's economic council, and more famously the father of Ben Stein, said, it can go on until it can't go on anymore. Meaning that it just runs out of the power of it. When is that? Don't know. Is it coming? Well, yeah, you know, it's easy to say, yeah, you know, if we apply laws of physics with entropy, and then yes, you know, the energy will run down.
Do you have any sense? Do you have any sense about like how I mean, I think there's sectors of investors like Trump haters and stuff that are very underweight, and they're trying to catch up, and they're getting squeezed in.
Yeah, there we go. That's a good question, Peter.
You know, do you have any sense from talking to people that you talk to that there's a catch up going on, or am I wrong about this?
You know, Peter, I don't know the answer to that, and I'm not searching out the politics, because I've gone to the point, and this is a standard. You know, anybody who reads my blog, there's no politics in there whatsoever, and even now in discussions, and even very, and I have a lot of liberal friends for years and years, but the only thing, and we've come to agree on this, we're not going to sit and carpe each other, because nobody is enamored with Trump as a human being, but that doesn't mean that the policies are wrong. So we'll discuss policy. That's what we've agreed to. We'll discuss policy. Anything else? Gibberish. You know what? As I say to them, don't regurgitate. I don't watch Fox. I don't watch CNN. I don't watch MSNBC. I'm really not watching it. CNBC. I listen to Bloomberg Radio most of the day, because it'll give me breaking headline. I don't want to. I don't want it. It just gets in the way. So you know what? Whatever your feelings are, but as even my little friends.
Well, what I'm getting at, I think there's a lot of underinvested players are getting squeezed in the year end here, which isn't.
Well, there are fund managers who have to chase, because you hear all the stories about how much money has been taken out of equity markets and put into bond markets. Well, it's been a pretty good year. So are you going to see a rotation coming back? Well, as I look at the S&P bonds, which I was going through this morning, let's put up that chart in the way that I watch it. So here it is. And if you look at that, it's a line chart, of course, because I have it's on a daily continuation. And we know, I know exactly when the all-time high was made, October 3rd, 2018. Now think about that. And Judd, you know, we talked about it. I had it in the blog. I was getting out because it was just time. I said, it had been on a 30% straight up move.
29.44.75.
It had made that move, and I said, and we talked about it, Judd. That's a real time discussion. I sent you a note. I put it in the blog. And yeah, I was, I just said it's just too much, too fast. And we know what happened in the last quarter was a huge correction. Well, Pete, I'm going to give you this answer. We got back above. We're above the November high when it failed to make a new high. We're back well above the December. We're back above April's during all the discussion about tariffs going on, going off, increasing, not increasing. And then, so we're back above those highs as I sit here on my is a rude and crude chart, 2063.
Yeah,
I want to see if it has
bar up, Ira, for everybody to see.
Okay. So I want to see, because prior to that high that was made, again, this was money rushing in. October 3rd was the first day of the quarter, or the second day of the quarter, last quarter of last year. So people were putting money to work. I would like to see this, what happens at 2095, which was the high made on September 21st, before it made the all-time high. That'll be a good test. I want to see if it fails there. Because it is. Pete, your point, people are chasing. They have to chase. Look at this. The equity market's up 25% this year. I'm talking about the S&Ps. If you've underperformed for your clients and you're not invested, and you've got 40 or 30 or 40% in cash, they're going to be all over you going, well, what were you doing? So a lot of people put money, even though the returns won't be there, but at least they'll be invested. Here, I've got 3 emails this morning about Becky Quick saying, well, you got to be 100% invested, on CNBC because there's just nowhere else to go. And people are saying, here's a bell ringer. Here's a bell ringer because she said, I can't be in bonds anymore. Well, for all the years she interviewed Buffett, she certainly didn't learn that be fearful when those are greedy and be greedy when those are fearful. Because if you're running into 100% stock position right now, you need your head examined. You need your head examined. I'm sorry, but I said the same thing about people who are buying bonds. Why would you extend duration? When the 2.5 was sitting at 0, when the 2.10 was sitting at 0, I said, why would you buy anything more than a 2-year note and stay as short as you can? Why would you be taking on duration risk? And you know what? I'm pretty comfortable. Right now, yesterday the 2.5 was up to 12 basis points. Thank God I've been involved. I got out. I'm actually coming back to it this morning because I've been able to leg into it. But the 2.10 went out over 30 yesterday. You know what? I'm comfortable. I don't want duration risk. I think you're out of your mind to take on duration risk.
That goes back to also, Ira, to the article that was on Bloomberg quoting Druckenmiller. We have negative real rates everywhere and negative absolute rates in some places. With that kind of unprecedented monetary stimulus, it is hard to have anything other than a constructive view on market risk and the economy intermediate term. That's the key phrase, I think, is intermediate term.
Right. And everybody, and then what did he say after that? He says, don't forget it. I can change quickly. That's what he says. So, see, he's in that mindset too, because he's been wrong at times. Like in 98, 99, it took him a while. Soros really had to push him because he was working at the Quantum Fund then to get more heavily invested because he was afraid of it. But he said he held his nose, but he invested. Is he in this one here? He sees all the loose money. He sees a lot of what we talked about. That's why I loved the interview with Druckenmiller. Some people were going, what is it? I go, the man's probably the best investor. Not only is he a good investor, he does what we sit in this room and do the analysis, and it comes over it. I know that's how they operate because I actually interviewed at Soros in 2005. I had a guy named Eddie Zweiter who was running the room. And we have a long conversation, and he explained to me how they work. That they sit and they have these kind of, they're not BS sessions, where people have done their work and they're thoughtful and they're bouncing stuff off of each other, and they're actually able to monetize, because somebody may not execute on it, but others can. And if somebody uses your idea, you got paid for it. So, there was a lot of incentive to being a thinker and thinking through ideas, even though you may not have been the best executor. So I really found that, and it's really what I've been preaching to this room right now, is that I think that there's plenty of opportunity in here to do that. And that's where we should have our focus at. So that's what we should be trying to do. So that's where this situation lies. But that's where, Druck took you through it. He laid it out to you pretty well. But he said, yeah, I'm going to follow this because I can see where it's going. The money is rates are negative, which they are, real rates as well as nominal rates. And until that changes, where else are you going? Where else are you going until there's one of the sparks, I call that starts a prairie fire, ignites itself? What will it be? I don't know. Will it be a default somewhere? Will it be the fallout from WeWork? Because WeWork is going to have an impact on this market because their numbers were so big. And Masa-san, as Chris Whalen, discussed, he's got some issues too, because there's just not one of these, by the way. He's been throwing money at a lot of things, and and the Wall Street Journal had that really good article about WeWork and Newman's work with Masa-san and how they pushed and bigger. Interesting in this world. Very, very interesting. But if you think that there's not landmines out there, or as I would consider piles of dry tinder that are going to be ignited, I think you better think again. And it's not about the impeachment, because I think we can already see where that's going, and we're pretty, in things I discussed with you, I said, why do you want this impeachment? It's going to be an embarrassment, and nobody's going to come away with really anything except that Trump is going to be able to be the ringmaster in his own way. And it's already going on. But that's where it's lie. And again, I don't make the rules. You can only play. It's just, as I like to say, the world, when you look at the investment world, and Druckenmiller really said it too the other day, you have to look at it and put on your mindset. And I don't care whether you're a technician looking at charts, or you're a fundamental analyst, you have a map in front of you.
Uh-huh.
And when that terrain, you're like a general in battle. When that terrain changes, you better change too, because otherwise you're using outdated information and you're fighting a battle that's being fought in a different terrain. And you know what? You're going to lose all your troops. You must adjust to battlefield conditions.
Well, we talked about this morning, Ira.
Yep.
We don't care whose idea it is. If it's a good idea and we see it can make money, who cares? Give the guy the credit for coming up with the idea. And,
exactly.
And a lot of times Citibank's a really good example. I didn't want to buy it, even though it was down in the low 60s, because I just thought it was the most poorly run institution on the planet. And the year before,
and it is.
And it never went anywhere, so I didn't get rewarded, because that bank should be at 140 if it was any good. And
hey, let me tell you what, just for anybody, every time I see what's his name get rolled out, he discusses it, from Dick Beauvais to Mike Mayo. And I look at them, oh, Citibank. Go ahead, put up a monthly chart of Citibank. The stock had a high base because they did a reverse split. The stock had a high of $580.
Yeah.
I'm not kidding. Go put it up.
Yeah, there it
Show
is.
everybody.
Okay, and now it's yeah, and it's well, the yearly it's even more striking.
It's
any type of retracement, it should have gone to 140 last year, the year before.
Yeah, it's massively. And then you juxtapose it with JP Morgan, which is making all-time highs. Hello. So, yeah, and that's one of Chris Whalen's, he over the last few years, when they raise these issues, and he'll poke holes in it. All right, let me move on to Anne-Marie's question. She wants to talk the bounce in the dollar. Yeah, the dollar certainly has bounced from where we were the other day. Well, prior to the, I thought that the euro would rally with the Swedes, and it did. Now it's struggling here. So why is the dollar struggling? Well, part of it is certainly the equity markets have sustained themselves. Yields in the U.S. are moving higher, so you have people buying U.S. debt. There's no question about it, trying to chase a little bit more yield. Hold on, I don't have my favorite sheet this morning, but I will get it. One second. So you,
200.
I'm sorry?
And the Aussie's kicking up above its $200.
Yeah,
Yeah.
Listen, Druckenmiller, he wasn't bullish the dollar. In fact, well, he's looking for a commodity rally because that's why he wants to be in the Aussie and Canada and Kiwi, because they will do better in a commodity-based rally. So, that was pretty easy to take apart with where his thinking was there. The dollar rally, actually, this has been an interesting week because, we've had expiration, we know. So, as Judd pointed out, the euro has now filled its expiration gap. Well, not all the way to the bottom, so it's careful. But the Swiss had an actually pretty good week up until today, but that's not close to filling its expiration gap, and is actually, hold on one second, because the dollar, it's still hovering at that 200-day moving average on the dollar index. So I think that this is really temporary. The Swiss is still higher on the week. Hold on one second. I'm just going through. I want to answer the question in the most here. Okay, so the dollar, as we talk here, the dollar index, I believe, is testing the 200-day. As somebody's breaking up, I can't hear that.
No, Ira, what chart are you looking at? Are you looking
I'm looking at the right
itself or what? Because that's I'm looking at 37.39 as the 200-day.
You got the March. I'm looking at the spot. So I'm on DXC, and I'm looking at it on the spot is at 97.64. We're right up against it. Is the dollar going to get more momentum? Well, I don't know, but I would say that the dollar really, relative to how well the equity markets have pushed this week, its rally has been
Ira, from my mathematical perspective, the way I model things, the dollar index is past peak. All we're doing now is we're going to start making a series of lower highs. in anticipation of the Fed eventually having to cut sometime in the first quarter. Or the second quarter. But you can see it. You know, for me, the peak in the dollar comes in the economic regime where you have growth slowing and inflation slowing. That economic regime ended on September 30th.
Oh,
Where did,
okay.
look where the dollar peaked, October 1st.
And Anne-Marie talks about, you know, I didn't see Mnuchin's comments last night, I have to say. So somebody want to tell me exactly what he said?
Wait, who? Repeat that?
Well, Anne-Marie writes that it feels like the dollar got juiced by, it must be Mnuchin's comments last night. I don't know what Mnuchin said, so I didn't see it.
Well, I mean, look, it's not like it can't have a counter trend bounce off of the lows that it set on December 12th.
Yeah, well, she's
Hey guys.
Yeah, go ahead.
Yeah, okay, so what he said was that he felt like the dollar was doing well, that it was strong because everywhere else had negative rates, and he could see that European banks were still hanging on to the dollar. But see, before those commentaries, the dollar was really struggling. And so, forgive me for putting on my little bit of, oh, we got to help the market out where we can and whatever. But he came out and said, oh, no, this is da-da-da-da-da. And so as soon as he said, hey, listen, this is why the dollar should be moving, why it should be holding. European banks are still hanging on to the dollar. But the more I read, the more I see that they're cashing in and not trying to hold the dollar. So my suspicion about the dollar strength has got nothing to do with technical motion, but with a crisis of confidence as the repurchasing market and the repurchasing window stays open and that balance sheet gets higher and higher and higher. At some point, don't we have a problem there?
Yes, and that's okay. So the repo, so Anne-Marie, so the repo market right now is sitting pretty comfortably. Although Poszar has a piece out this morning where he's expecting more trouble before year end, I believe. What did I see?
I read that one.
Yeah,
I read that.
Okay, that one I saw. But right now, you know, yesterday, you know, every day has been, you know, less dramatic than the previous day. So people have kind of complacency and they're thinking, see, I think that the short-term dollar rally here has come off of that. Well, the repo market hasn't blown up, so the Fed's not going to have to pump in more liquidity than they previously thought. So I think that's probably more to do with the short-term dollar turnaround. Of course, the interesting thing is, well, and I'll stop there because because honestly, everybody knows, I don't care what Mnuchin says. I've so little respect for him. Sometimes he speaks his own book because he's trying to make the case as the Secretary of Treasury for banks. But Trump is a weak dollar advocate.
Right.
Bob Lighthizer is a weak dollar advocate because Bob Lighthizer views the dollar, just like he learned from John Connolly, as a tool in order to exact policy changes from other countries. You know,
yeah.
Bob Lighthizer seems to believe that in the Connolly aphorism that it's our currency, it's your problem. I think that Lighthizer is an advocate of that, especially being that he was so intricately involved with the Plaza Accord. It's our currency, it's your problem. And we'll take it to levels that'll scare the hell out of you. And I think that Trump is an advocate of that. So when Mnuchin talks about it, I don't know what he's talking to, honestly. And he makes all kinds of noises. He was also, you know, if I had if I had $1 for every time he came out and said, oh, you know, the agreement, the tariff agreement is right around the corner. You know, I could have retired this year. So he speaks to things. I wish he'd go back to Cabo and not call any banks this year. December, he seems to want to get a little busy. But I think you're right, is that this is more an effect of the repo market. That, you know what, there's no panic right now, no matter what Poszar. What did he exactly say last night?
Thank you, Ira.
Poszar, he's not to be diminished, but, you know, he thinks that there is going to be, you know, a little bit more, but I'm not seeing it. And I'm like you. I said, oh, the dollar has actually performed well here. I will raise this issue, and I raise this with Druckenmiller in mind, because Druckenmiller, I guarantee you, has bought and is buying British pounds. And when I was reading all the things about why the pound was getting whacked, and this was one I actually waited until yesterday to start buying some. I tried to find some levels where I'd be comfortable, but I'm watching the FTSE. And if you put up a FTSE chart, I don't know, Judd, if you can put that up. Look what the FTSE's done for the week. Consider what the pound has done, and then look at the foot. And I keep looking at this, and I go, well, if you're selling pounds because you're so worried about Brexit in its entirety, then why the hell is anybody buying? Why would you be buying British equities? If this is going to be so bad for Britain, who the hell is buying equities? You got to be out of your friggin' mind.
Yeah, and look at the monthly, Ira. It's a huge breakout. Huge breakout in the FTSE in the monthly.
Yeah, you know what? And the cheaper the pound goes, and I know what the correlation is. Cheap pound gets cheap British assets. End of story. That's what's taking place. But at some point, where do people, you know, turn around and go, why am I selling pounds? Really? I'm selling pounds? What am I buying? I just wanted to point that out as long as Anne-Marie had raised that issue. And it's the right issue to raise, because the repo, the fact that there's been no blow up in the repo market has been very important. You know, and then there's talk about the Chinese debt market. You know, let's see. But anybody else got something you want to cover? Because then. And I'll tell you what, the equity rally fits perfectly well with this steepening in the yield curves, as we've talked about. Steepening yield curves, regardless of what some of the people come out on in the media and say, oh, you know, 10-year yields are moving higher. It's short-term yields that have the most immediate effect on equity markets.
I was waiting to talk to Ira since yesterday, so. He's really helping understand what's going on there. That's pretty interesting. All right, so let's.
Why are you don't?
No, I think she's talking to her.
Yeah, I just muted her. She was talking to her group.
Yeah.
Oh, okay. All right. So when we look at this, you know, the equity markets are doing absolutely right, because as these curves steepen, it shows that the Fed and other central banks are going to just sit there. And if the long end goes up, fine, but it'll go up because of anticipated inflation, what they want, or growth. So tell me which one.
Ira, you mentioned back in September, September 21st and October 3rd, the high we were talking about the high in the SPU bond spread. But, you know, and so let me see if I can tie this together. So the S&P high in September, that high was 29.44 in September, and then 29.44.75, which also was which was Judd's top level at that point. And then we broke from there in September and October. what were the yield curves doing off the top of your head? Do you have any idea? Is the core? I don't know if I'm drawing a correct correlation from the yield curves to the SPU bond spreads being at all-time high. And what were the yield curves doing?
Well, if we remember, don't forget the Fed was raising rates, right?
Yeah.
Shoot, I think I got rid of those charts. I just had those on the yields. You know what? They were pretty flat because it was the short end.
Okay.
It was the near dates, you know, because the Fed was, first of all, what were they doing? They were doing QT. Well, for sure they were flattening. But they were doing QT and they were raising rates. You know, what Druckenmiller in his December of 2018 interview called the double barrel shotgun approach, which he believed was wrong.
Hey, Ira, when you're done with that,
Yeah.
I can't remember which bond I had up before, but I think I had the minis and now I have the pit. You get a different view because of the roll today and the spreads. They're already at your level.
Okay. That's a good point. So I have to think about that. Yeah.
So just take another look at it later. It's really important this time of year, guys, to know which chart you're looking at.
Yeah, that's a very good point. Very good point. What else were we?
Judd, what did you think? Sell it now or hold?
I think you take half off right up in here, Angelo, or at least going in.
All right.
Well, you got another.
I'm looking for that. I'm looking for that Poszar, but those are important charts just to give you again some context and perspective to where we are with all this, because it's very important. And Anne Marie asked a very important question, you know, especially because the dollar seems to have stabilized itself as long as the Fed is not being pushed to the wall. I think the dollar was anticipating that the repo market, as Poszar had laid out, would be far more. Damn it! What did I do with those charts? I know I have them, but they were definitely flattening, and that was a big part of the problem. Who asked that? Matt. I'm sure that was Matt. Right? Yeah. The curve. I can say that the curve was definitely flattening because that's what we were. That's what was causing so much of the turbulence was that, you know, don't forget, and everybody was saying, oh, they're flattened. That was the conversation taking place everywhere. And oh, is a recession coming? Is a recession coming? And I think that was part of the reason for the Powell pivot come January, that he got nervous with that because he wasn't understanding that very well either.
Well, then. So to expand on that, I guess, and this is what I was trying to think of the way to tie it together and shit, I think I just lost it. Was the inversion in the summer, which caused that, you know, that nice spike in volatility that we had, which, you know, was a nice part of my year. In our conversations here, the whole world is calling for inversion and starting to call for renewed volatility, and you were still looking for the yield curve to steepen.
Yeah, it did invert, and I said, "No, it's crazy." Well, hold on one second. I have to see. Yeah, I said, you know, I thought that they would react to it, and they did. And they weren't the only ones. So as soon as Draghi started shipping more money out into the world, everybody. Got a sense of what that was about. So, okay. I still think they're going to steepen. And I think Druckenmiller feels the same way. And because again, they're trapped here. I just can't imagine. I can't imagine Powell coming out with a new pivot on January, January 4th, and going, oh, you know what, we need to start raising rates. I wish he would. Honestly, I wish he would. It would give me more comfort and would give me a greater sense of direction. But I don't think that there's any way in hell, because he showed you how terrified they are of the markets, and that's the equity markets heading south. You know, that's what he's terrified of.
Yesterday in your conversation, you brought up the Riksbank, that you would hope that they would. Yeah, I mean, I know it was more tongue in cheek that they would raise above a quarter.
Yeah.
I mean, not above a quarter, above even. You know, and they came back to zero. Okay, so and this just popped into my head. Does that have any correlation to Powell and the U.S. Fed saying, we're going to remain steady for the year? And how will that affect the Eurozone or the ECB?
Well, I think it will affect the ECB. It's a little early here yet, because it will affect the ECB, because she's now got some room and she's now getting some other thought process. I mean, the ECB came out with a paper, I think it was yesterday, talking about that they could go to negative, -1.
All right.
Hello?
Whoever that was, I muted him, Ira.
Okay.
Yes, somebody was yelling.
So there was the ECB research group had a paper come out yesterday that they could go to -1%. I thought it was preposterous, and I said, well, why would they put this out? They may have worked on it under Draghi, because they just didn't do it. In the last, it's a more extended research paper. I thought it was ridiculous. They're not going to -1%. First of all, they don't have deflation, as Druckenmiller kept hammering. They're not in deflation, and I can't have been more consistent for those who want to compare the U.S. and Europe to Japan. How it's such a weak analysis to make that comparison. It's just a total. Japan had real deflation, so whatever happened in the currency markets was far different. And whatever happened in those markets, far different. What more can you say? And they're just such faulty comparisons. So I mean, we can't express that enough. Where it goes, I don't know. I think that valuations, quote unquote, are stretched, but they can go on longer, because I think bond valuations are far more stretched than equity valuations, which we're seeing, by the way, in that S&P bond chart. Now that's government. You know, we're not even into the high yield stuff. That's just government purchases that, you know, people have bought a lot of bonds. Look at the. Let's put up the Bunds. Well, you can't affect it in yields, but in yield terms, the Bunds have dropped. You know, where are we at? I can run it right now. I just got it. Hold on. I got so much stuff to read. Oh man, I sent you that thing from the FT yesterday. They sent me on my
I love
yearly,
that.
That was hilarious.
It was great.
Kind of scary, but that's all right. Okay, so German yields right now are -24 on the 10-year. Okay, -24. They were at -70, 71, 72. So again, that's a pretty sizable move. There are some people, and now they may not be selling, but there's some people sitting on some significant losses, by the way. No matter how you shape it, palladium is still getting whacked hard. Platinum can't get out from under itself today. There must be the auto sector melting down or something. They're not going to need any of these metals.
Oh, it is.
Yeah, those are really getting whacked. But you see it. And now let's see, the U.S. curve is at 29 this morning, the 210. I think it's going to continue to steepen because I think some people are starting to wake up and going, wow. You know, and they're asking the question we've asked in this room for 9 months now, 10 months, 11 months, which is, how do you explain the U.S. deficit this year being over $1 trillion when the U.S. has had the best growth, GDP growth of any of the emerging markets, of the developed markets? Just doesn't make sense. And that was Druckenmiller's point, why he said, I'm not buying this long stuff, because he's concerned about the debt. Now, you know, again, everything runs its course. And when I say everything runs its course, it runs its course this way, is that things become, as Ben Hunt would talk about, narratives. Things become the standard narrative. Right now, debt is of no concern to anybody. To certain elements in the Republican as well as in the Democratic Party, they are actually believers in MMT, modern monetary theory, that, hey, you know, as long as you use it reliably, I don't have to worry about it because rates are low and I can print all the money, and with that purchase debt, I don't have to worry about government debt. Okay. And again, it's not a problem until it's a problem. So, all right, that's where that lies, and nobody's concerned about it. But Druckenmiller raised the issue, and I happen to agree with Stan. It's a very important stance to take because there's a lot to be concerned about because it's inexplicable. It's inexplicable how the U.S. continues to run these deficits, and this is an issue that the Democrats should be really hammering about. Because, the Republicans, you know, let's go. Should we go back to Paul Ryan when he was Speaker of the House and his concern about deficits? Gee, you know, I'm really amazed that nobody comes out and interviews him. He's like, you know, disappeared. But he's probably, you know, working for some private equity group or something. And I don't mean that to diminish him. That's what they do. They get jobs. And he certainly knows a lot of budget process and how debt. But why aren't people interviewing him to discuss, hey, Paul, what do you think about where we are in the debt situation? Why indeed? Why? Nobody's concerned. But, you know, 6 years ago, it was a major concern. No, nobody's concerned. Well, and sometimes when supply dwarfs demand, I know what prices do, unless you live in a autocratic state in which they can control them otherwise. But when supply dwarfs demand, and that's kind of what's going on in some of the repo market, by the way, because of the huge amount of debt that the Treasury issued in the short-term market, created a massive supply that if it was to be funded, reserves would have to be allocated. And, you know, there are those who think that there's more to that than anybody even wants to discuss. But the Democrats should be ripping the Republicans apart over where the deficit lies right now. Ripping them apart. Nothing. They just passed a budget. Did you go through that budget? I had somebody send me an email because I told he's a staunch Republican, and I told him, hey, it's baloney. And I said, you can take your defense spending and stick it, you know. And he got offended by it, but he sent me a note on Wednesday going, I agree with you. You were 100% right. He said, I thought that they would be able to rein in some of it. He says, the defense spending did exactly what I told them it would do because that's the way, that's the politics of the budget process. It's why I like Alan Simpson so much. It's why I like people why I like Erskine Bowles, because they understand that everything starts with defense spending because everybody's in on the game. Nobody's opposed to it. I'm not a defense spender. Listen, I believe you have to have, if you are the major dominant imperial power in the world, you need a military to support it. But that doesn't mean that you have to have the military that they spend on. That's just my point. I'm not.
Yeah, look what Russia's doing with a very small defense budget, really. And the weapon systems they're coming out with, you know, they're playing a lot with little. The U.S. is spending a lot, not getting much.
Yeah, it's funny that you say that. Who is that, Peter, or was that Angela? Peter. Okay. So yesterday I went to get a haircut, and my barber, where I go here, it's not my barber, but the woman who cut my hair, we were talking, and she's from Sevastopol. You know where Sevastopol is, right?
Yeah.
Crimea.
Yes, we do.
Yeah. So we were talking about it. I said, well, you know, it's never going back. And she gave me a history lesson. I said, no, she was like shocked that I knew, because I said, yeah, I know Khrushchev gave it back to the Ukrainian people in the 50s. And so we were laughing, you know, but we were discussing it and what Putin's doing. And everybody in there was either from Crimea or Kazakhstan, the people who cut hair. And I like them. They're funny.
Were they all ethnic Russians?
Yeah, they're all speaking Russian. I said, I'm sorry. Otherwise, you know, it'd be like Elaine Bennis going to the Korean manicurist. You know, I know that they're talking. So, you know, but it was, we discussed it, and it's, you bring up Putin, and they, you know, and they say the same thing too. Don't underestimate Putin. You know, the American foreign policy establishment, you know, they like to scoff at the Russians, but you know, he's made. He's done some things, whether you like it or not. Oh, let's see, RSX, one of our favorites for the year, was up over 26 today, I believe, right? Yeah, it did. You couldn't sustain itself, but it's, you know, it's hanging in there. Yes, yeah, the U.S. defense budget is out of control, but it makes for everything else to go out of control, because as long as everybody agrees to spend, that's the compromise. And don't forget, the budget process in the U.S. legislature is all about that type of compromise. So once you get people spending on defense, well, how are you going to say no to my demands for a state park in Albuquerque? You know, it's all trade-offs. But but the defense is the big. Is the big what's the word I want? It's the big progenitor of it, because you know, you get your aircraft carriers, you get procurement, you get jobs, you get for manpower. Yeah, and everybody's got some type of defense plant in their district. You know, it's like, I'll bring out my traditional lefty side, even as Phil Oakes would sing. You know. I'm working in a defense plant. You know, I got a deferment, but I'm working in a defense plant. But if you're all part of it, listen, to my chagrin, because I'm not mercenary enough, I don't buy defense stocks, and I really don't like when I would watch CNBC and they're promoting defense stocks. You know, and I go, yeah, you know, I can't get myself there, and shame on me, because they've been good investments. But I don't buy defense stocks, because that would be supporting the ridiculous amount of spending that takes place in the defense sector. Believe me, as Alan Simpson and Bowles on the Bowles-Simpson Commission, which got knocked down right away, and I really, you know, to me that was a huge mistake by Obama by not supporting that, because he could have really made inroads. I would have been a big supporter of Obama had he shown leadership on that, but he got really cold feet. The lobbyists made too big of an impact. But I could take 10% out of defense spending tomorrow and not affect the defense stature of the United States. And I know all the procurement people will tell me, there's no chance in the world you'd be, okay, you know what? If I was president, that'd be the first thing I do. So I know my electability is nil.
Well, one thing they could do, you could start buying some of the Russian missile weapon systems. for a big discount.
Yeah, no, you can't, because
I know.
that
I'm just making a joke there.
No, I know, but that's what you would hope. Oh no, we can buy drugs from Canada, but if there was a better, listen, they won't buy Israeli equipment. You know that it's a big thing because the Israelis have developed some very
good stuff.
Yeah, but they won't. They work on projects together, but they won't let the Israelis. You know, that's why a lot of people in Congress are full of crap, because the Israeli defense sector could sell a lot of goods, but they're not allowed to. Like India wants to buy Israeli tech, military tech goods, but they won't allow them to sell it because that's what, I don't know if you saw the piece that Merkel was really upset with the U.S. for wanting to place sanctions on the Germans. They're talking about putting sanctions, I don't know if you know this, because of their involvement with Nord Stream 2, which is the Russian Gazprom pipeline. And she's furious. She's furious because the U.S. passed that, what's it called? Hold on. I know I have it written in my notes. Oh, the 2020 National Defense Authorization Act. It's a measure to punish companies involved in Nord Stream. This was passed by Congress. And, you know, under, you know, in the recent budget. And the Germans are furious because they feel that in international relations and foreign policy terms, it's called extraterritoriality. When you're a dominant power like the United States, your global reach by your legal system it's like with the sanctions on Iran. You violate U.S. sanctions, the ability for the United States to punish those who violate through the extension of U.S. law into other nations is called extraterritoriality. And the Germans are furious about this right now because they really think it's going to impact, especially in the winter, because they're almost done with that pipeline, you know, and it bypasses Ukraine. So there's a lot of things that work here, but stay tuned for this one. This is going to get more serious because the United States is really reaching to try to prevent Europe being totally dependent on Russian natural gas.
Well,
stay tuned.
And the article too, Ira, was about the drug companies and drugs, U.S. drug supply.
Right.
That they want China to have anything to do with their supply chain. And that goes back
good point,
to Joe's comments, I think, last week when he was talking about China wanting to undermine our construction sector. This rolls right into that same conversation that they could actually do deleterious things to our supply chain in healthcare.
Well, you know what? It's whenever you get dependent. You know, again, let's go back to. Do you remember how these tariffs started? Do you remember what Lighthizer and Navarro and Wilbur Ross invoked? Do you remember how this began?
Oh, refresh me.
Okay, the 1962 Kennedy tax. What was it actually called? It was called the Growth and something tax plan of 62 Kennedy, and embodied in that was Section 232, which said that for national security reasons, the president can invoke tariffs on goods if he felt it was going to impinge upon national security. So the first way the Trump administration, because Lighthizer is such a great historian of these things, went after was aluminum and steel were impacting national security. That's how this whole thing began to take place. So that umbrella, and it's always scared me. Anytime anybody invokes national security, it gives them a wide berth, a lot of latitude for a lot of other things. And in this case, that's what happened. So, and then, so again, Huawei. What was Huawei? Huawei was because of national security. Everything becomes national security. So this is a dangerous slope in all kinds of ways. And again, that takes me back to the defense. But, you know, I'm just not a defense spender. Yes, I know you have to defend. You have to spend when you are the world's hegemon, as the Chinese would call it. And the United States is. Since the fall of the Soviet Union, nobody has been able to challenge the U.S. in wanting to do whatever it wants to do. So it just, there's too much stuff that goes on that's nefarious, and it bleeds into many other things, and that's the whole budget process itself. Okay, Steve, to everyone, I'm surprised EU isn't taking advantage. Steve, it takes a while to develop those pipelines. It's not only Cyprus, but don't forget that Israel also has two massive natural gas finds off the coast of Israel that are now no longer even being challenged, the Leviathan fields. And I forgot what the second name was, but they're massive. Some is being sold to Jordan, some to Egypt. They're hoping to connect. Steve, you make a good point, because they're hoping to connect with the Nord Stream project, because those pipes will allow it to get the gas to Europe.
If I'm not mistaken, Noble Energy, NBL, is involved with that.
Very big, very big. Yes, you're 100% right. And the Cyprus deal, of course, is still being a little bit challenged, because Cyprus has always got the problems of northern Cyprus, and with the Turks' involvement, and that's one part of the EU situation that has yet to be resolved, but continues to be a thorn in some people's sides. So it's a very good point, Steve, but it's not something that you do overnight, and it takes a lot of funding. And the fact that for all the sanctions on Russia, and this is what has angered Trump, and people, you gotta give him credit for that, because he has challenged. What did he say to the Germans? He says, you're getting on me about this with the Russians, but meanwhile, you're the ones who are giving them all this money by buying all their energy. It was actually a pretty true statement, but that goes back to, of course, an issue that's bothered me for years and years and years, which is the fact that German Chancellor, the ex-Chancellor, in fact, the one before Merkel, who is Gerhard Schröder, is the chairman of the Gazprom pipeline project after he signed the agreements when he was Chancellor. And then he goes to work for it. Not only work for him, it's a major position.
Yeah, so, there's a golden parachute.
Everybody forgets. Again, we remember what we want to remember and disregard the rest, if I can quote Paul Simon. That's what we do. But these are very complicated in the way that they're intertwined. But the Germans are really upset because the United States, under that bill, is talking about enacting sanctions, and that'll sanction Germany. So, and then Lighthizer again. Oh, you know what? And let me, Anne-Marie, if you're still listening, coupled with the repo was, and this started because the euro was actually performing very well, and then all of a sudden we heard from Lighthizer, I think on Tuesday or Wednesday, all of a sudden he broached the topic of possible enhanced tariffs on Europe, that the European trade issue was going to be the next big thing. And that started, Judd, I sent you a note. I could, hold on. I know what I can time this exactly because I wrote you into the chat.
Yeah, well, right now I'm like a dog.
Okay, I hear Tuesday at 1:42, getting out of Euro. This is what I said to you. You can go in your, I got it in your chat. As Lighthizer is out talking about Europe is next on Trump's trade agenda.
Right.
So that's when the weakness in the Euro started, where it just could not get up. Let's see if that's, so the fact that Lighthizer, so couple that, if Anne-Marie, if you're listening,
Yeah, she's here.
I think that's, okay. So we can actually, and I'm glad I went back and had that because I sent you that note. Yep, that was Monday, Tuesday. So 4 in the morning. So yep, there it is. The Euro starts to, oh, and then it reopens when on the Globex reopen at 5 o'clock. We start to see, and it's tried to rally there after the Swedes yesterday, and then failed.
Yeah, and it just rolled right through the 200-day back down again, and that was the end of it.
Yeah, so there are some people worried, and myself included, that they're going to go after some of the Europeans under this Nord Stream threat, as well as other trade issues that Lighthizer brought up. So, but see, I'm a little mixed on that though, because is Lighthizer being a believer in using the currency, the dollar as a tool? Is he going to say, well, we'd like to see the euro, appreciate. You've depreciated the currency. We'll start to hear Trump start talking about the weak euro that they've intentionally depreciated, which actually plays into Lagarde's hands because it gives her some room to maneuver. If I'm right in my views, and I don't have a reason not to think that I'm right about the way she's going to use the Swedish deal, it gets very interesting now. But the euro did. Let's make no mistake about it. The euro did weaken as soon as Lighthizer came out with those comments. So things to be aware of.
Yeah, and your commodity names you always like to look at, which was ConAgra and Bunge, really blasted off.
Yeah.
Today. So they're coming before the end of the year.
Well, but that fits Druckenmiller because what Druckenmiller said is he's bullish commodities now.
Right.
Commodities have been a dead sector for almost 6 years. I mean, it really is sideways. And as we talked about looking at Bloomberg. You know what? And I actually put up the I hadn't looked at it in ages, CRB index. And if I look at that on a weekly basis, I mean, you can see how dormant it was. From 2014, it's been, and now look, I got the CRB index up, the cash index.
I don't know if I can pull it up.
Let's see if you can pull it up. It's sitting at the 200-week moving average today.
No, I'm not enabled for it.
Okay, all right. Trust me, I'm telling you right now, it's the 200-week move. It's the 200-week moving average is, I'll give you the number, 185.01, and we're at 184.82 right now. And it's got a lot of pent-up power. So Druckenmiller's buying Canada and Aussie currency because they're commodity currencies. And, my favorite of all, I'm not catching it, but don't look at the ruble.
Yeah, somebody was just asking another question here too, but I'll have to.
Yeah, go ahead.
Hold on.
And this will be my last. This will be my last one.
Eyeballs are so bad sometimes. There it is. There
Steven.
Yeah, Matt, give that to Ira. Yeah. So the ruble's through the 200 week, and it's through all the major monthly moving averages, and it's strengthening. So big time.
Yeah, and I mean when you look at and I'm telling you, the woman who's running the Russian central bank has been very good. I love reading like when she talks about when they make a move, like they cut rates, but she's really, really, really good. I'm highly impressed. They're still beating on Palladium. which is leading all the industrial metals now.
Yeah, they hit they hit everything at the same time off of Palladium. I think going into London's close, everybody was bailing out everything.
Yeah, I agree. Somebody decided it's time to exit, and they took platinum down because platinum was higher all morning, but it now took it right down with the, or it was unchanged, I should say, really all morning. But all right, we covered a lot of ground. Let's see, anything else? But actually, that piece with Lighthizer, and that's for Anne Marie, because as she noted, the dollar. But couple that, and the dollar has come back quite a bit because of that. But I think it really started, and we could time it because Judd, I sent you that note right to the Lighthizer comment.
Yeah, and it's also big.
But,
yeah.
And now the FTSE is lower on the day, and that's probably because of the mining companies who are getting beat up, but also the sterling has done pretty well today, still up on the day following.
Come all the way back. So
yeah,
it's just going to be, you're not going to get a lot of love here trading back and forth here over the next week.
No. Wait for your moments. It's a thin holiday market, and the ability to exact pain, as you can see. Look at Palladium. I mean, and people, it's been a darling. It's got a $110 range already today.
Yeah, it's a huge ORL day. I mean, they just blew everybody out. Once it went through 1887, it was over.
I guess Navarro's been out there talking too, but I have a nickname for him. He's his Indian name is Walking Bird. You know why? You know why, right? Think about why he's called Walking Bird. I have to watch myself, but a little too full of it to fly.
Yeah, there you go.
Yeah, I rest my case. All right, this has been, I think, but listen to the. I thought that was really a good podcast. If you didn't get a chance to listen to it, and we'll build on there. And I did give WhiteWave a plug at the end, and hopefully, you know what? Last night, when I wrote up, because with Dennis leaving the battlefield, I think this room becomes much more important, because you were going to have to figure out where, as even Dennis says, you're going to have to figure out where you're going to get your global macro input. So Matt and Judd, you guys got to get to work figuring this out. So
okay, yeah, and Dennis was on the on Bloomberg today too, doing his final round. Listen, he's a world-class guy, and I've been reading, and I know Dennis, and you can poke fun at him. But as an analyst of the global macro scene, he's done a great service. And you couldn't go into a bank trading room of any stature who wasn't reading his stuff. And I'm going back to the early 1990s. So he has had a long run in a business where it's hard to have a long run, and he should be applauded and not, I know that Zero Hedge loves to diss him, and but if you had paid attention to Dennis for years and years and years, you have a lot, he's promoted a lot of positive ideas and returns.
Absolutely. And, one of the things, and just to end, I guess, on what you were saying about the importance of this room and what we're doing is, and tying it back with Gartman, one of the things about Druckenmiller in that piece that I liked is that he's talking about the long-term, intermediate term, and he's now able to pivot back into the short term. So, the macro, the pragmatic technical analysis that we need, coupled with the execution that's going to keep us nimble and on our toes, and preserving our capital while we trade.
Yeah, you know what? and there are so many themes that are going to develop out in 2020. And again, the commodity theme, what happens with the central banks if they start to get inflation numbers, as Bookvar has argued. You know, again, you know what? Stay tuned, because and it's one of the good things through FRA and some of the work that they're doing. And I'm trying to get at him, and Judd, you should reach out to Richard Benugli and tell him, because I told him when I'm coming in, he should be in this discussion. So there are synergies here that you can start to develop to get this room out. And listen, the people who are in this room, if you've gotten positive, you know, ideas, you should be spreading the word. This is a place where the professional trader investor can come and really find investable or tradable ideas with, you know, most importantly, I hope that if we're successful, that we're really helping people minimize the risk, as well as, you know, and look at, it's just not coming from me, but, you know, the pushback and the ideas here, you know, Anne Marie's discussion, these are important things, and at least gives you a view into it. So, you know, hopefully we should be building this up. And again, because we're going to monetize it. And I'm not apologizing. You know what? Not whatsoever. Because, and I'm hoping Dennis gives us a plug, because people I know, I'm sure, are asking him. I've sent him a couple of emails. He hasn't gotten back to me, because somebody of a very high stature said to me, why don't you take over? Why don't you call Dennis and take over and plug yourself in? And I said, I'm not sure what he's doing. And, you know, but I sent him a note, because the person told me to send him a note, and I did. And he knows that, but I haven't gotten back, and I don't want to call him. I'm sure he's inundated with his well-deserved victory tour.
Yeah, and you know, the good point about this room, Ira, is that, you know, a lot of times here, I had one of the RIAs came in, and I'll give you an example here. It's Target, okay, at the beginning of November, and he asked me about it, and I was, you know, and I didn't listen to the guy, because, you know, they're getting research, fundamental research from a lot of places, and my mind doesn't work that way. And I didn't see the trigger yet for Target. And he, you know, and Target just, you know, rallied 30% after he came out with the idea.
Was that Adam?
No, that was a guy named David from here in Chicago. He's up in Skokie. And he asked me about it, and you know, it was just one of these things where I just didn't see the trigger yet.
Yeah. No, you can't, right? Because your strategy is not everybody else's strategy.
Right. But so everybody in this room, and sometimes they go, sometimes they don't go, but you know, it's we try not to dismiss anybody's ideas. We try to go through them.
No, exactly, because you know what? There's nobody I know who has the best ideas. You know what? As you hash them out, you find your ways. And it's, you know, people say, you know, I did a couple of those Wall Street weeks with Scaramucci, and actually one of my favorite guys is help me. He's great. He was on with Scaramucci. He did Wall Street with Scaramucci. He used to have that half-an-hour program on CNBC from 10:30 to 11 every day. He was great. Oh God! Now I got to go search. Yeah.
I can see him, but I can't.
Yeah, believe me, he's a blog reader. He's why I read Eric Peters, because he. Okay, now I got to go do this. Sorry, it's because it's going to kill me, and I'm not. And he's one of the best. He's one of the best guys. I used to love listening to him. Hold on. He's going to kill me. I talk to him all the time. Oh, man, my mind. Let's see. Gary, I know, Gary Kaminsky. Oh, thank you.
Yeah. Oh, he's great.
Gary Kaminsky's great. He's great. I haven't talked to him in a while, but when I did those Wall Street weeks, they were good. We covered a lot of really good ground. And I was really, they bought the rights from Rukeyser's. They didn't buy, they licensed them to be able to do it. So he was on it, but it takes pushing things out like that and challenging. Because if you're not challenging, nobody's got all the right answers. I mean, you listen to Druckenmiller here. So right now, I just got an email from a buddy of mine going, liking Druckenmiller's Aussie dollar trade. Okay? But it took Druckenmiller to put it out there. Now, he may have had that trade on, we don't know for how long. And, it used to be that he says he's timid. Gee, I can only imagine what timid is. He probably is only trading a $150 million position. Yeah. I was laughing. If he's timid, I'm a eunuch.
Professor Hairless Chihuahuas.
I'm a eunuch if he's timid. It's we shall see. But that's what it is. It's putting these ideas out there. People, I put the trade on. It's not the immediacy of putting it on. If the trade is any, again, as you've thrown people out of this room for talking about a 5-minute trade. Well, if that's your trade time, fine. Then it may not be for you because you may have to actually be patient and think through some of these, rather than just run your mind. But but when we flush out stock picks from the global macro view, I think that's one of the strengths. Look at these guys who I sit with. I didn't have the indexes. One guy, Bob, he's 85 years old, 86 years old, and I wish I could hit the light bag as he can still hit it. He's in great shape, and he is a CEO of a major corporation one time in his life, and he's great. But so in May, we had a thing where we picked where the Dow would be. I don't care because I'm not good at picking indexes, and I don't care about the index per se. But so he had, in December, the Dow would be at 28,500 by the time we all came back for our first meeting, which was Monday. We had our first sit down, and it's really it's like being in this room, but we're face to face and we have a good time for a couple hours on Monday afternoons. And he hit it right on the head. But I didn't care. I said, well, let's go, because we picked individual stocks too. And I said, let's go look at the individual stocks rather than the indexes, because I think my pick was like 24,800 for the Dow. So meanwhile, I had KSU, I had RSX, ABB, because I was already starting to turn on there. So I had various stock picks. I said, now how's it look? And that's the goal. That's the goal. And if we can ferret out, good equity picks based on a big global picture, again. Oh, so when I was on with Wall Street Week, both times I was on with Cabelli. And I'd say, Mario Cabelli and I couldn't be more different. Mario Cabelli is a great bottom-up analyst. I'm a top-down analyst. But if I can find you to things from a top-down perspective, so be it, right? Who cares? Who cares how Deng Xiaoping. I don't care if the cat is white or black as long as it catches mice. And that should always be our mantra.
That's exactly right. I love that.
Yeah, it is great. He said that in 1979, when he was having to battle against the party. If Mike's there, he'll fill in our Chinese history. But as he had to battle against the hardliners, that was the operative methodology. I don't care if the cat's black, right? Just catch mice and that's what we should strive for. And And look at Judd. You know me as long as anybody has. Because of my intense work, I'll be early on things, and I think, Pax, you've learned this. I'll be early. And again, as the great Howard would teach us, if you're early, you're wrong. That may well be. That's the essence of learning the patience. Mm-hmm. But ferreting out the ideas and investable ideas and things that can avail us for the right reasons, that's a good thing. So
well, I got that from 95 when you gave me an order for 36 million mark yen. And I came up with the other day. He said, "Did you do anything?" I said, "No, it's the wrong way on the cross all day." And gave you the order back.
See that? But I'm more, keep thinking and keep promoting and keep pushing. But you, Judd, I told Mnuchin that, and others that they should start coming into this room because you can really get real-time investable ideas and add to the conversation. Don't be afraid. As I said, there's too many freeloaders. Anne Marie is risen to high status because she asks great questions. But I learned that night when we met and talked face-to-face with Cordelli. Yeah, it was really good. Yep. Pax introduced me. And she was really good. I could see right away how hard she works at this. But you know what? Can't be a freeloader. Everybody got to jump into the community. And even the good question, again, questions make this happen. And again, 10 years of writing that blog, and I can't get people to take some time. What the hell? You'll binge watch Netflix, but you won't go back and search the archives of Notes from Underground. Go ahead, see not only what was developed, ideas that flew out of there, but a lot of it is still relevant. Because unfortunately, as Bookfire reminded us, it's been 10 years. This is like, my beloved Lenny Feldman would say to me when I went to work on the floor, and he said, he says, try it. I thought, I don't want to work down there. I hate the place. He says, try it. So to the day he died, he would remind me, I thought you were only coming for a month to experiment with it.
Lenny was so good.
I'm telling you, to the day he died, and I really, how close he was and how much he taught me, and what, in so many ways, such a great mentor. And I had the opportunity to go visit with him shortly before he died, and he told me he loved me, which meant so much to me, but he was still teasing me. He says, for a guy who came for a weekend, it didn't turn out to a bad ride. He was truly very close to his demise, and he was still working me about it. So
he had such a straight mentality about him, about how he just viewed just broke it down and simplistic. Here it is.
You know what? I was with a guy yesterday having breakfast with, and that's what's called that old nose. They're just guys who know. They can smell a rat a mile away. Mm-hmm. Just, and they can sense when things are not right. It's like, my friend Chuck, his stomach is as good as it gets. End of story.
Yeah.
End of story. He
always was.
He knows. He knows.
Matt and I talk about these guys that write these books. Is he in it?
Yep.
No. Maybe one of the greatest traders of all time. No.
And I would say to him, I said, why are you doing that? And he would, he respected, and he still respects the way I work. But his gut at times, because that doesn't come easy, by the way. That comes from, you don't develop that sense without working at this. And I said, if you think that this is a hobby, you go find another. You may as well go to the casino every day and roll dice, because then you only have a limited amount of money you could lose. This is not a hobby. This is an endeavor. You know what? And I got the data from the FT to prove it. Let's see. I can pull this up. Who's got that? Let's see. I know it's here.
Here, I'll pull it up. You want me to do it? Here, I got it right here.
Yeah. How many articles did I read?
That was
of
crazy.
the FT last year.
Hold on, give me
Yeah, that was
2000. Yeah, by the way, you're a little short from the year before, I might add.
I know.
Yeah.
I know.
You read exactly 2000. What the hell is it?
900?
2,109.
And
2,109 articles last year.
In the FT. That's
in the
not counting
FT.
Bloomberg and Reuters and
Yep.
everything else and long research papers. So I go, if you think that this, I said, you think that this is a hobby? No, this takes a freaking lot of work because you have to cut through, and that's the great work about Ben Hunt from Epsilon, is you have to cut through the BS narratives that get a lot of promotion. The thing I hate most about, and I can't stand Davos. So when Boris Johnson said he wasn't going and he wasn't allowing any of his cabinet to go, I applauded it. Mike.
Xi's not going either. Only Trump.
So yeah. And as I said, and it's been my battle cry since I've been writing the blog. Pepper spray Davos. That's my attitude. Pepper spray them all. Lay it on them and make them all cry like they make the rest of the world cry.
Make them cry.
Make them cry. Well, it came from because there was that famous thing. There was a demonstration at the University of California, Davis, where the university cops and the local cops were laying. The demonstrators are sitting there and they're spraying them like with a fire hose with pepper spray, and it was despicable. I said, you know what? That's what they should do to Davos. They should make those people cry just like that. Sorry, I'm just not a crony capitalist. I don't believe in
Take all their money away. That'll get them.
That's not.
Well, you know what?
That's not going to happen.
To that point, listen, that's incredibly important. To that point, crony capitalism. Let's just see. Take a look in a microwave. Well, not so micro. Chicago. How does crony capitalism work in places like Chicago, Illinois? I know that's not quite where you're going, but
you need to buy a tank to get through the potholes.
Yeah, and you need to be if you are not sent by somebody, if nobody sent you, nobody wants you. I forget how in the hell that went. That saying goes.
Wait. Let me give you something better that came out yesterday. Okay, did everybody see the story from the Bank of England?
Oh, about the high frequency guys having access to their notes.
Yeah.
Now I'm going to tell you. Anybody who knows me, I've alluded to this that this is going on. Nobody believes me, but in fact, when I ran for the board last year, put it in my letter. You can go see it. I made this point about protecting the retail investor. That there's too many news organizations with access, and what most people don't understand is how this stuff. So when there's an unemployment report released, the media gets it 30 minutes early. I don't know if you know that.
Yes, I want to talk. Yes, please. Let's talk about this.
Okay. So, and then they're quarantined. They get it early. It's like when Steve Leisman, when there's a Fed release, he has it so that he can prepare. That's the way they've done it for, I think, 40 years. So they get it early. They write up their notes. Well, I always think that these notes there's too many. There's a proliferation of news organizations now. It used to be just AP, UPI, then CNBC. But there's a proliferation. There's, Forex, there's this one, that one. And I've always wondered who owns them. But because they're always crafting headlines to create the greatest volatility. Now, we as traders should applaud that, right? We love volatility. But the headlines always lack the context because they're all key worded to make this place. And I've maintained that some are getting them. And in today's world of nanoseconds being important, the fact that somebody can hit a button and it gets released, or somebody, this is what's going on. And, you know, if you read through, do I have the article? The article was I mean, to me, it confirmed, and there's not denying it, but the people who were promoting this also did it with Fed and bank and ECB. So I'm waiting to see this story blow up more, because this one really bothered me. I can't. There's too much wiggle waggle in it, but this one bothered me because it's everything that I've thought, and I've thought. See, my point is that the regulators, the SEC, should be on top of this, but they're nowhere to be seen, unfortunately. Nobody has. Everybody's dropped the ball on this issue, and I think it's been going on. And I don't have I know I have the article, because.
Yeah, the SEC is too worried about trying to let the little guy get in on private equity.
Yeah, that's what the word. Let's see.
That's
Hold on
a scary thought.
I know that I have this article somewhere. Let me find it. Hold on. I cannot let go of this, because this is important. This is important for traders, for people who make their living, because, you know what, they're getting it early. You know what a second means in today's world? Come on.
We're 1/10 of a second.
2 seconds, 3 seconds, exactly.
It's an eternity. It's a bazillionth of a second.
And anecdotally, we have talked about this. You know, people. You know, I have raised this issue with people. They don't like it, but they say how. I go, what do you mean how? You could see it if you pay attention. You just see certain things, and they're always the same. And they for sometimes they attack this. If it's in the currencies, they're attacking it. As others are attacking gold if they have an interest rate, you know, edge to it. God damn it, where is it?
Yeah, I mean, years ago, I was talking with Don Wilson, and I said, we were having a conversation, and I said, well, I try to, look for trades where I could make 80 ticks, like in the currencies, risk reward. Yeah. And he said, I make my money one tick at a time. And
right. And you can't listen. That's right.
And he's worth, well over $1 billion of them.
Yeah. And that's what I say. That's what I say in my room every day. Is it's one trade at a time. One trade at a time. That's the only thing that matters is the next trade.
And to be able to on the next trade.
That's the whole point. To be here for the next trade. That's the only thing that matters. If we're here for it, then you've accomplished your daily goal for it. Be here tomorrow.
Again, if you think of it as you own a department store, okay, with all these different departments, there's currencies, there's commodities, there's equities, there's bonds, there's all types of derivatives, and the ability, and the thing is, capital is your inventory. So if you blow through your capital and you can't open your store the next day, you're out of business. So Christmas may be tomorrow, but if you've blown through and you're bankrupt, you can't open it. Okay, now I have the article. It was from the FT. The title is FCA, which is a financial watchdog, probes early audio streams of Bank of England press conferences. That's the article that first appeared about this. There was a rapid event. The central bank confirmed what it called a wholly unacceptable use of its backup audio feeds of press conferences by a third-party supplier, which has refused to name, citing legal reasons. Referred the matter to the Financial Conduct Authority, which said it was looking into the issue. The identity of the entity supplying, it is specialized in fast delivery of publicly available audio content. We do not carry embargoed information, and we do not release information without it. So they're trying to get out ahead of it. But this is not going away. Because I guarantee you that there are people who are on the losing side of some stuff who are going to go, huh? No. But it's a sense, let's see. Mid-low market volatility, steady interest, some funds and proprietary traders are focused on being the fastest in converting valuable information into trades by making the technology enabling it to do so as efficient as possible. They spend their own capital on trying to but the race to be the quickest to trade on information from governments and central banks in the world where trade is automated has sometimes been problematic for authorities. In 2011. The Times described that the relevant supplier had hacked into the, here's the key. The Times described that the relevant supplier had hacked into the audio feed at least since the start of this year and said documents showed the service had been sold on to high-speed trading companies through an unnamed market service. It's not clear that any hacking took place. Clients were charged between $2,500 and $5,000 per press conference for access, now listen here, to the audio feed, the newspapers reported, adding the high-speed audio services have also been offered for similar events at the European Central Bank, the U.S. Federal Reserve, and the Bank of Canada.
Well, they got them all.
So, but I'm not crying about this because but what have we always discussed? Be patient, right? Classic was the October 31st Powell press conference, which we had done such great work for to prepare. And if you were patient, again, because somebody was moving before others and they pushed it and then all of a sudden reversed.
Yeah. Oh, on
my point,
Ira, is for the exchange, the data is there. You have to click on the marches on the site,
okay.
And then you'll get, and then if you go to quotes, then you'll get the quote.
Okay.
See, it's a two-step deal.
This is okay. All right. Well, good. Because when you have problems, if you don't voice them, because, the exchanges are, and believe me, I'm very impressed with some of these guys who manage these departments. Very impressed. And I haven't until I got inside to take a good look, but they really know what they're doing, and I've been and they listen. So, and they want to be able to, because they know, the retail investor is very important to this. It's not that they're throwing the most volume, but everybody is looking for them. So the better you serve them, and if they did something and it's not making it easier for people, then we have to then you should voice it, but you got to approach it in that way.
Okay, well, we got it.
So I mean,
that's all it was. So
okay, so and that's not this last thing we talked about. It's again, let's put it in its full context. If this is going on, listen, the history of the world is that there are people who get huge advantages and legs up on other people. I'm not going to stop that, nor are you. It's not. We'd like to have a quote-unquote level playing field. But if we're not going to have a level playing field and we sense that this is going on, that makes the need for patient preparation, again, as October 31st was a classic case of being prepared for exactly, what unfolded. Or the preparation was, if it didn't unfold, how should I be reacting to it? Which is, a lot of times more important. So, but it teaches us why, again, as we stress, you have to be patient. Let it start to unfold, because again, these are coded headlines, meaning they're key-worded headlines that people are taking advantage of because as they want, as Judd, as you said, one tick. That's all they want is that advantage. Me, I want it, if it's a $15 gold move that day, I don't want 30 cents.
we can't click. You and I can't click the mouse that fast anymore.
I can't. I'm not. I don't want. I don't even want to. I don't want to. But I want to be able. If you're going to push that market that way, and my work, and the work says, well, this is a. Well, then we're going to take advantage. We're going to avail ourselves of that opportunity. End of story. I can't do better than that. So, everybody have a good weekend. Maybe we'll get a Monday or Tuesday shot in. And again, with the rate structure, the Bank of Japan did nothing. The Bank of England did nothing. We know that the Swedes raised rates, but it pretty much everything was as expected. And I hope everybody garnered something positive, and we'll go from there. And again, that book of our Waylon Harris piece is, I think, really worth listening to, and hopefully we'll get some more of those done. All right.
Thanks,
I'm
Ira.
out of here.
Great holiday weekend.
Okay.
Yeah, thanks, Ira.
All right, thanks, guys. Okay. All right, bye.
Okay.